Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment of Traders review. Today we're going to have a look at the 20th COT report of 2018. But before I start off with the review, I'd like to remind you that we have two new services out. One is called Futures Trading Guides. The other one is FX Trading Guides, focusing on forex markets. If you haven't yet checked these out, please do so. Thank you. So back to the review, and starting off as usual with the changes in commercials positions. The Mexican peso is on top of our list with a 28% change in commercials positions. You can see that change over here on the chart. It is definitely much greater than average. It is a bullish COT change signal that is suggesting prices should move upwards early next week. This heavy decline that we've been witnessing in the last couple of weeks, month, should change. Question, of course, in the medium to long term, is that possible? If we open a 5-year chart and look at the COT Extreme situation, you may see that slowly, steadily, we are moving away from this bearish COT Extreme that was in the market mid last year. You can see that was exactly at this top, and since then the price of Mexican peso has dropped significantly. Now, of course, we haven't reached that unquestionably large, close to all-time bullish COT Extreme that we had back over here. You can see on the chart from 2015 until 2016, and eventually you may see when the price started going higher over here early last year. So basically this is a relative bullish extreme. We can consider that not significant, but together with this change signal, the price of Mexican peso could actually start moving upwards. Big question over there, of course, for the future. The New Zealand dollar is our next market with a 19% change in commercials positions. As you may see, interestingly, both large speculators and commercials are above the zero line, meaning both of them are net long, just barely above the zero. Of course, small speculators are the ones taking a definite short position over here, which of course in itself can be considered a bullish signal. So we have once a larger than average change in commercials and also in large speculators positions. It can be considered a bullish COT change signal. And jumping to the 5-year chart, you may see, although we have not reached those close to all-time extremes, but we're definitely getting closer towards those levels. So the extreme is starting to get larger towards the bullish side of the market. The next market is the gasoline with a 17% change over there in commercials position. In this case, we're talking about a bearish change signal, as you may see on the chart over there. Jumping to the 5-year chart, you can see that as prices are headed much higher, the extreme is getting wider and wider towards the bearish side of the market. Currently, we are at a 272 report extreme in case of commercials and 318 report extreme in case of large speculators. This can, of course, easily continue in the next couple of weeks, month maybe, which means you have to be cautious with any trade. But definitely this report is signaling that the stress level in the gasoline market is increasing rapidly. The next is going to be large speculators COT Extreme. Starting off with the Swiss franc, we have a 563 report extreme in large speculators, but if you look to the right, you may see we have an all-time extreme in small speculators position. So this is a very significant bullish COT extreme. You can see that basically this week the price of the Swiss franc was unable to decrease further, so it stopped. Who knows if this is the end of this decline? Could we see a bounce upwards? One thing's for sure, the COT report is suggesting that. We talked about the gasoline, so we're going to jump that over and switch to the lean hogs market, and right away open this 5-year chart. You may see we have 161 report extreme in large speculators and 312 report extreme in commercials positions. Unquestionable bullish extreme. I talked about that last week, and you may see there has been a decent rise in the market right now, which means this signal may have already taken its effect on the market. So we could see further increases in lean hogs judging from the COT reports perspective. And the last market for this review is the Australian dollar with 118 report extreme in large speculators and 119 in commercials. You can see these extremes definitely very bullish. Maybe not as bullish as in case of Swiss franc that we just analyzed. You can see back over here in 2015 and actually in 2013 as well, we had even greater bullish extremes in the market. Nevertheless, it's a strong one, which is definitely pointing upwards, meaning we could see a rise in the market in the next couple of weeks in the Australian dollar. Okay, that was all for this review. Of course, you can do it more in-depth and detailed COT analysis using this page if you want. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.